Andrew here, Mortgage HQ. We've got day 19 of the 21-day property investors course. How to pay the mortgage off faster. Now, at a high level, there's only two ways to pay the mortgage off faster. You can have lower rates, therefore your total monthly or fortnightly repayment is going to be less because the interest cost goes down, or you can increase your repayments. And by increasing your repayments, you have debt for less time, which means less interest paid, means less total commitment that you have to outlay. So at the moment, 2022, coming into the middle of the year, doesn't look like lower rates is going to be a thing for a while. So we can kind of discount that out unless you're on a non-bank lender or you fixed for a long time in the past and now you're going to be refixing on lower rates. Most people, their mortgage commitment is going to be going up. And higher repayments is going to become even harder because you're getting volunteered to do that anyway. So paying the mortgage off faster is what everyone wants to do, but the only two options aren't really desirable. So what I'd like to say is there is other ways to pay the mortgage off faster, and it revolves around further investments or investing and using that surplus cash to do lump sums into your mortgage. But just for beginners, there's two ways to pay the mortgage off faster. Don't buy into the BS from other advisors about special patented formulas or like miraculous new ways to pay the mortgages off faster. All of them are just going to center around getting lower rates, like a better deal through a refinance or restructure, or increasing your repayments to speed things up, which is going to make it harder for you. So in America, they've got a thing called a HELOC. We don't really have that in New Zealand, so don't go down that rabbit hole. What you really need to do if you are keen on paying the mortgage off faster is understand and have discipline in the area of revolving credit. And you can check out some of Blandon's videos, put the links in the comments below, and offset. So some banks will offer an offset product, and if you've got cash savings or your family's going to help you out, the offset can be really helpful. But using a revolving credit is going to help you chip away over a long period to shave years off the mortgage. And so revolving credit gives you a lot of options. And so options is what you really want, because if you want to pay the mortgage off, say, instead of a 30-year mortgage, you want to pay it off in 20 years, and then you sign yourself up for a 20-year mortgage, you're signing yourself up for a higher commitment regardless of what's going on in your life. So if someone gets sick or you lose your job or there's a hit to your income in any way, if you're signed for that 20-year term, then you can't get out of it. And the time that you want to get out of it is when your statement of position is going to be at its worst. So what you really want to do is you want to pay the mortgage off faster, but to give yourself the most options possible. So you want to build up an emergency fund, 20, 30, 40, 50, even 100 grand, depending on how big your family is and what your lifestyle centers around. Have that emergency fund ready to go in your revolving credit, and that will help you minimize your repayment. And then at the end of the year or periodically, if you're starting to build up a surplus of cash by paying the minimum repayments, then you can do lump sums into your mortgage, pay down some principal, which is going to then in turn lower your repayments. You can repeat the process. I get so many people that get caught up thinking I got to pay the mortgage off faster, which is a great mindset to have, but what you're really trying to build towards is financial freedom, and you don't want to trip at the finish line. You want to make sure that you've got options, because people do lose jobs, people do get sick, people do want to take a couple of months off between things. You need a reserve fund. Usually the reserve fund disappears when you commit yourself to higher repayments. So don't get suckered in by flash marketing from some firms that are going to say they're going to shave 13 years off your mortgage, things like that. They might very well do that, but at the expense of limiting your options, and that 13-year saving on day one might actually not materialize because you've put yourself in an even worse position by, like, essentially you're flooring the accelerator in the car and not having any control over the brakes. Like, you can steer that thing for a while, but sooner or later you're going to want to stop for a break, or you're going to have to, there's going to be some speed bumps or corners that you can't navigate. So just take a deep breath before you commit yourself to higher repayments. because you can achieve the same result with lump sums and revolving credit, and at the same time giving you a lot more options. Any questions about paying the mortgage off faster? Let us know below.